This wave trend indicator strategy I'm about to show you is one of the highest win rate strategies you can possibly do in trading. It is very easy to use and works in almost every single market, and most importantly, can make some money. Well, enough to talk about, let's get straight into it. The wave trend oscillator is one of the most popular technical indicators used by traders. Essentially, this indicator uses market waves to find trends in the market, and it's pretty damn good at it too. I will also be backtesting it to prove how profitable this strategy is. So make sure you watch this full video to see how I pair it with some other indicators to make your performance so much better. First things first, let's add the wave trend oscillator indicator to our chart. To do that, go to your preferred trading view or chart website. Look for the section or menu that shows indicators and search for the wave trend oscillator indicator. Click on the one that appears at the top. Now that we have the wave trend indicator added, let's understand how it works. The wave trend has four main parts: the wave trend line, the signal line, the wave plot, and the zero line. The wave trend line is usually shown as a green line and represents an average of the last 10 days. The signal line is the red line and reflects an average of the last 21 days. The wave plot shows the difference between the wave trend line and the signal line. When the gap between these lines is smaller, it means the wave area is smaller. When the gap is larger, the wave area is bigger. You can also observe that when the wave trend line crosses above the signal line, the wave area starts expanding. On the other hand, if the wave trend line crosses below the signal line, the wave area expands downwards. Lastly, the zero line is like the center point of the wave trend indicator. Now that we have these four parts, let's make sure we understand how to use them. The wave trend indicator is really good at spotting trends. In the world of markets, if you want to see if a chart is about to go up, look for the wave trend line crossing up over the zero line. Let me break down how this indicator works in simple terms. When we see the wave trend line crossing above the zero line on the chart, it means that the price is moving up. On the other hand, when the wave trend line crosses below the zero line, it indicates that the price is moving down. Another thing we can look at is the wave area, which tells us how strong the momentum is. If the area is getting bigger, it means that the momentum is increasing. If the area is getting smaller, it means that the momentum is decreasing. Now, let's talk about how to use this indicator effectively. When the line crosses upwards, we should only enter a trade if it crosses below the zero line. If it crosses above the zero line, it's not a good time to enter the trade. The same principle applies. We want to short a trade. We should only do so if the lines are crossing downward and are above the zero line. As you can see, this indicator is quite easy to understand and use. However, many traders make the mistake of relying solely on this indicator. Let me explain why this doesn't work well. The wave trend indicator works best when the market is following a clear trend. For example, if the chart is going up, the wave trend indicator will accurately signal that the price is about to increase. But sometimes, even when the price is going down, the wave trend indicator might incorrectly suggest a long trade, which is not what we want. To avoid this issue, we can make a simple adjustment. For instance, if we want to go long, we should only do so when the market is in an uptrend. We should never trade against the trend because it usually leads to unfavorable outcomes. One way to determine if the market is in an uptrend is by using a 200-day moving average. This is a tool that calculates the average price over the past 200 days. By adding this indicator and setting it to white or any color you prefer, you'll see a single line on the chart. If the price stays above this line, it means the market is in an uptrend. If the price falls below the line, it means the market is in a downtrend. When the line that shows the direction of the wave crosses below a certain mark, that's a signal to buy. It's also important that the current price is higher than the average price over the past 200 days. This way, we make sure we only trade when the market is going up, which is a powerful combination. If we want to sell instead of buying, we do the opposite. We need to make sure the price is below the average over the past 200 days, and the wave lines are crossing downwards above a certain line. For example, let's say we want to make a trade where we buy something. We would do it when the wave lines are crossing upwards below the certain line, and the current price is higher than the average over the past 200 days. To protect ourselves, we set a point where we stop losing money, called a stop loss, just below the average over the past 200 days. This acts like a barrier that the price has to break through in order for us to lose money. To make a profit, we aim for a target where we can sell and make 1.6 times the amount of money we invested. In this example, the strategy worked exactly as we wanted it to, and we made money. However, we can still make this trading strategy even better. This strategy works really well when there's a lot of price movement, but it starts to get unreliable and gives false signals when the chart starts moving sideways and losing momentum. In those cases, the wave lines don't match up well with the price movement. If you traded during that sideways movement, chances are you probably lost money. To fix this issue, we need to make some changes to the strategy. We need to combine the wave trend indicator with trend strength to find important moments when prices are changing a lot and losing their momentum. To do that, let's remove the moving average. Instead, let's add the ADX and D indicators. Look for the ADX on the chart, and you'll see 3 moving averages. Go to the settings and uncheck the D and D options. To make it easier to see, you can use blue and white colors for the ADX and its levels, especially if you have a dark chart. When the blue moving average is below the 20 line, it means the trend is not very strong, but when the blue line crosses above the 20 line, it indicates a strong trend is happening. Now, let's make one last adjustment to the wave trend indicator. Change the settings to 40, 15, -40, and -15. Then, go to the style settings and set the middle plots to white. And uncheck the last plot. From this point to the red line, we consider it as the upper channel, and from this point to the green line, it's the lower channel. A valid cross only happens when the wave trend crosses inside these channels. To make a long trade, we need a clear entry. I wait for the wave trend moving average to go below 0 and enter the lower channel without any crossings in that area. Once the wave trend crosses above the signal line inside this lower channel, I check that the ADX is below the 20 threshold line. If the wave trend crosses below the green line before its cross, then the trade is not valid. If all these conditions are met, I enter a buying position. I set my stop loss at the recent lowest point in the price. To take profits, I aim for 1.8 times the amount I risked. In this example, we see that all the conditions were met, and it was profitable. On the other hand, for a short trade, the process is the opposite. I wait for the wave trend moving average to go above 0 and enter the upper channel without any crossings in that area. When the wave trend crosses below the signal line inside this upper channel, I check that the ADX is below the 20 threshold line. If the wave trend crosses above the red line before its cross, then the trade is not valid. If all these requirements are fulfilled, I enter a selling position. I set my stop loss at the recent highest point in the price. To take profits, I aim for 1.8 times the amount I risked. In this example, we see that all the conditions were met, and it was profitable. Now, let's look at the backtesting of this strategy to see how profitable it is. We started with an account size of $1,000, and we risked 2% of our account on each trade to make 6 times the amount we risked in the market. So, we finished testing this strategy and looked at how often it wins. It seems like a good one to have in your toolbox. We should also consider how much money it makes, and it looks pretty promising to me. Make sure to keep coming back to this trading spreadsheet, because we'll keep updating it with profitable strategies for Forex, crypto, and stocks. Our goal is to help you become a better trader. All I ask is that you take a quick moment to like this video. If you want to stay up to date with my future strategies, make sure to subscribe. In my next video, I'll share a strategy that works even better than this wave trend strategy. I hope you all learned something useful from this video, and I'll see you next time.